Hi everyone and welcome back to Stefan Livera podcast. Rejoining me on the show today is my friend NVK, known as the CEO and founder of CoinKite, the creators of the Coldcard and various other products, as well as a long-time Bitcoiner. NVK, welcome back to the show.
Thanks for having me, man. It's been a minute.
Yeah, it's been a little while. I know you've had some good updates recently on the Coldcard, so we should chat a little bit about those. I saw that probably the policy thing is an interesting thing to start. So this concept of having spending policies in a single signature device, can you talk to us a little bit about this? What does this mean? What can it be used for?
Yeah, so I think like the background on this is that like we've always sort of tried to do operational security in a way that like people can, the easiest possibly way of operate their businesses or their personal sort of BTC, right? But without us producing a same vendor app or us needing a server to cosign or essentially like no counterparty, right? Like that's like a big part of like how we like to operate like our solutions. Like how can we remove counterparties, right? Even if they're just cosigners. And we sort of like been playing with that. We created spending policies for multi-sig on the Coldcard so they can have two keys. One key is the device key that does policies. And then we sort of like, due to market demand, we sort of expanded that to single sig. So what does that mean? It means that you can have, your main Coldcard or your second one or, your travel one with, an important seed on it, right? But the device can take now spending policy. So that means, what's the max I can spend from this device? What is the velocity of it? So how much per period, right? Like say like, 1 BTC max per month, in block time, of course, but, 1 BTC per month. Or you need 2 FA from a phone in order to spend, and that's super powerful because one, first of all, is provable, right? So like you can show to, the bad guy or whatever, that like, this device is set up this way. I cannot change it, right? That's a big win. Another thing is you can, for example, set up devices for coworkers, for controllers in the company, or when you travel, you can travel with a device that has this spending policy. So, you don't have to trust the operator, right? With how much he can spend. Now, of course, it has trade-offs. It has, security limitations because it's based on the hardware security. The current architecture, has not been demonstrated to us that somebody can extract a seed, for example. But again, it's like, is this for your total life savings in single sig, no passphrase? Absolutely not, right? Like, but this is robust enough that you should be able to operate your business needs, on your monthly basis or quarterly basis without too
Right.
much worry.
So this is like your business warm wallet, not your deep cold life savings or business, large stack, but it's more if you want a warm wallet setup or kind of cold, but with certain spending policies that allow you to, let's say, rate limit the amount of coins or whitelist addresses, this kind of thing.
Exactly. The whitelist was a big one for traders and company controllers. What's cool is that they set up essentially like, a handful of addresses. Unfortunately, exchanges, most of them reuse addresses to deposit. So you just lock those in. And then you can also lock in a few addresses for your vaults. So you're essentially capable of going back and forth between the exchange and your operational device, so you don't have to leave funds on the exchange. And you're also capable of going from the operational device back to your deep vaults that you don't have access to. You can just deposit to, right? And that's a big win, big win, right? Because a lot of people often, especially like, traders with like a bit more volume, they don't take the funds off of the exchange because, then they have to go unearth their deep vaults from some mountain somewhere, right? In order to go back to the exchange. So now they can essentially like go back and forth between the three substantially easier and safer, really.
Yeah, I think a lot of this comes down to making it feasible for more people to do self-custody, right? Because as many of us know in this space, there's a lot of custodial use, right? And of course, we're trying to be honest about that, but at the same
Yeah,
time,
absolutely.
want more people to self-custody. Obviously, you're building tools for that. Obviously, I'm encouraging people to self-custody where they can. I'm curious to get your perspective on this. Why is it that so many companies don't want to self-custody? Do you think it is a technical knowledge thing? Is it a legal and regulatory hurdle thing? Is it just kind of confidence or comfort with self-custody? Why, in your mind, are there a lot of people going for these kinds, or is it just like the convenience factor? Like, is it as simple as that?
Like there's many different profiles here, right? So like I think for individuals it's fairly reasonable and people do it. I think for individuals we see way less use of custodians.
Yeah.
I think the challenge is when you have a multi people company, right? So again, it's like how do you practically deploy controlling rules among a small organization, right? Let's say you have a mid-sized business, you're doing your 10 to $100 million a year in revenue, maybe like, you're making like, 10 to 20% of your revenue in BTC. Now the problem for you is like, okay, great. So like, I have my accountant, I have my controller, the people that can do wire transfers and stuff, that part of the office, right? How can I let them send and receive BTC without being a risk of them stealing it or them just being conned and robbed, right? And I think that's one of the biggest practical issues with businesses doing self-custody. And I think we solve a lot of that with some of our features. I think the next part is also like accounting and tax, right? So the tax burden on BTC is complicated in most countries, most Western countries. You have to, you essentially have to run a weighted average cost for BTC on how you calculate your cap gains because it's not like considered currency and
Yeah,
there is
gotcha.
no de minimis either, right? So, essentially like every time you, for example, you send money from your accounting, so from your checkout system, so BTC from your accounting system, from your checking system, which is like your shopping cart to your vault, you need to, for example, make sure that is very defined as just an intra-account transaction, so you don't get taxed on that. But then every time you sell BTC, you have to calculate that versus all your
Right.
your
And then again,
shopping
you're
cart
tracking
into.
basis and going, okay, when did I acquire
Exactly,
this coin? What is the price
exactly.
I sold or spent it? What's the
Yes.
difference? What's the capital
No,
gains on that? And,
exactly.
all this kind of complication. And maybe, I guess the other factor there is maybe the accounting software. Now, yes, there is some accounting software in the space where people are kind of like downloading a CSV and importing it into the accounting software. But I guess what you're talking about there is there's still some operational difficulty with actually doing that, right?
Yeah, so it's not simple. The accounting software is still like, to be blunt, shit. Even QuickBooks Online supports Bitcoin, but like once you turn on Forex support on QuickBooks Online, you can't really go back. So you can't turn it off. It's like it becomes messy accounting. And now you have to have bookkeepers that are used to the multi Forex version of QuickBooks, for example, which reduces the pool of people available to work, like substantially. You need your accountants to be used to it. It's not that simple. So, it does make it harder. And another part too is that like most mid-sized to slightly bigger businesses have very custom accounting software too. Um, they may use QuickBooks or Zero or some accounting software like that for the final sort of fiscal year, sorry, the word just escaped me. But anyways, they might their financials might be using some of that software, but they are normally the shopping carts and all the collection systems are very custom. So there's a lot of glue in accounting, right? It's very common for businesses to build their own software, or at least their own glue to support their own specific needs. And yeah, it's just tricky, but like I think we're getting there. Like Block is supporting it, and they support a lot of small businesses, so that should be
Yeah, and you've got
easier.
tools like Zaprite as an example to make it easy. I know
Zaprite is
that's
great.
quite popular for people now to take
Do
payment
they
on
do
Bitcoin.
WAC? I don't know.
Weighted average.
Do they?
I don't know.
Yeah,
I don't know
yeah.
if they have that. It might just be
We'll
more
ask
like a
Will.
CSV download
Yeah,
thing.
it's
Yeah.
great. Their shopping cart is great. We do use it for Bitcoin treasuries.net, for example. And I think the tools are gonna get there. It takes time, right? But I think we'll all get there, and hopefully we live in
Yeah.
a day where
Okay.
there's no taxes
Now,
anymore on this
to be
shit.
clear, we've been now, of course. We're against taxes here, but that's the world we're in today. But I guess the other point to get into on companies is what we were talking about. There was a lot of just kind of dealing with, let's say, the transactional side of things. But what about just for those hodling? Just like literally treasury companies who just have a treasury, right? They're not doing that many like in and out transactions. They're just mostly just hodling. Why aren't those guys at least doing self-custody? Is it just because of, again, comfort factor, non-technical, non-tech savvy, regulatory? What do you see there?
When it comes to securities, right? Like there is essentially it's all CYA, right? Like cover your ass. Like
Right.
you have to essentially follow best practices accepted by the regulators, right? And when you have a new space, everybody's a little coy to try to do anything different because you can get in some serious trouble, right? So it's understandable that they're sort of like they're taking their time. Now there is a few rules, for example, like it's very difficult for you as a securities company to not use, say, a qualified custodian, for example, right?
Right.
And so that reduces the pool of places and solutions you can use, right? Like if you're going to do it internally, it gets tricky, right? Like you have to do a lot of things, and you also have to own the technology, the stack, right? And most companies don't want to do that. So I think we're getting there. I think, for example, companies like Anchor Watch, they're going to be a very well used solutions for this sorts of companies.
Right. Because then they can have insurance and some form of, mini script
Exactly, like
style custody
if they
stuff. Yeah.
become a qualified custodian and they have insurance, like like it's a double whammy there, right? Like you're very good. But even the insurance isn't necessary. You just need like a very good technical solution, which they have, right, to the decaying multi-sig thing and the mini script stuff that they have. Plus, being a qualified custodian, that suffices, right? And then on top of that, you might find customers that want to pay for that insurance premiums and sort of like get an extra bit of comfort there. Then instead of having to use, say, Coinbase, Fidelity, or I forgot the name of the other one. There is one more
Well,
that's
like
a big
BitGo,
one.
Anchorage, Copper, Backed, and NYDIG. I don't know. These are some of the big custodians, I guess. And I guess that's the thing, right? I mean, to your point, there's not that many of these kind of quote unquote tier one or whatever, top tier, big pro level custodians. You can pretty much name them on one or two hands, right? In terms of the US ones. And there's a few outside the US, but
It's all new, right? I mean, like,
yeah.
just think about it this way: like, gold had 5,000 years, right? And fiat had at least 100, right? So, like, depending on how you want to look at it, modern fiat
Yeah.
versus slightly older fiat, right?
Yeah.
So it takes time, and I think everybody is just sort of like, everybody wants everything yesterday, and that's not like how like big money has a lot more inertia, right? Because nobody wants to lose the money, so it just takes time. But we're getting there. I mean, we're going there.
Yeah, it's interesting. And I think it's a fair point that maybe some of these, like the top end of town, like the big Bitcoin treasury companies who have, massive stacks, they probably have legal and regulatory kind of just requirements that are just not going to allow them to self-custody. Maybe one challenge now is if you look at, this is kind of a concern people are mentioning now, is like, look at how many of the big ETFs are just using Coinbase custody, right? And again, I think to your point, it's like a cover your ass thing, right? It's a CYA thing. They probably all went for Coinbase custody because I think one of them, they were like cribbing the notes off like the BlackRock one and being like, oh, okay, well, BlackRock got theirs approved. We better go Coinbase custody.
If you're gonna go public with a Bitcoin treasury company, like there's
or
like
an
50
ETF,
50 check boxes, right?
yeah.
I mean, like, do you want to make every checkbox a new thing for you to research, get compliance, and all the bullshit? No, like, you're gonna try to make them as straightforward as possible by just copying whoever is out there already, and then maybe you change those things, right? Like, it makes complete sense. As much as we don't like people to go in the same spot,
Yeah.
that's how things go at first.
do you see it decentralizing out over time, that maybe not all the ETFs, or whatever, 9 of the 11 or whatever, like a high percent of the ETFs are using Coinbase custody, and probably a lot of the big Bitcoin treasury companies, they might be using Coinbase custody. How does that decentralize out?
I think that will change because, I don't think anybody wants systematic risk.
Yeah.
Like you don't want to, like one critical path in this, and it could be a disaster, right? So I think an effort to de-risk each like the pile, let's put it this way, right? And
Yeah.
like maybe put them in different locations. It will be underway soon. I don't think anybody wants to be in a single spot.
Yeah.
And I think like, we're gonna have right now we have like 300 treasury companies, and plus another like 50 ETFs, right? I think we're gonna get to probably 1,000 by the end of the year. It would be
Damn, that's fast.
yeah.
Yeah.
I think it's very likely we get to 1,000. Well, that's if the price goes up, right? If the price keeps on going up. I'd say we get to at least 500 by the end of the year, depending on how the market goes.
Yeah.
Nobody wants to launch on a down market, right? So I think you're gonna start seeing companies having to find a differentiator, right? Like otherwise, it's just the same, and people are just gonna buy the top ones and the bottom ones. So as maybe one differentiator is like, hey, we use Anchor Watch, it is insured.
Gotcha. So they're going to try to set people at ease by saying, hey, we've got a better custody setup, we've got a better insurance setup, or we're using better technology.
Exactly. It's like people have to have marketing points, right? Even if they're just small differences, they are differences, and people have different profiles on how they invest their money in these companies.
Yeah. Well, let's talk about this now, because I know you are the founder of BitcoinTreasuries.net. I know you've got Rizzo. I think Rizzo's president there. I know he's working on that project as well.
Yeah, he joins us to be the lead there.
Gotcha. Yeah. So tell us a little bit about this. Now, I remember you started this years ago, and I remember we were talking probably even on the podcast. We were saying, or at least you were telling me, the idea was, hey, if you got the leaderboard, a bunch of these people stacking coins will want to like fight each other to be number one or to kind of rise on the ladder. And now, a few years on in 2025, we're actually seeing this now.
Do you remember them? Do you know the meme? It's like the how it started and how it's going on Twitter.
Right.
Like you have two photos.
Yeah.
We started, I think, with two companies.
Right.
I think
it was like MicroStrategy and Tesla back then.
Yeah, I think Block was even before them with the pile.
True. That is true. Yeah.
But I think we had MicroStrategy first. Anyway, I can't remember. But it was like 2-3 companies. That's it, right? And now we have like 1,000 companies there, like differing on what their setup is. And it's always been like, I mean, I maybe it's controversial to some of the new people in Bitcoin, but like, I think even like since the Bitcoin talk days, like it's always been the understanding that it's a matter of time before we find a backdoor into the financial system, right? The fiat system.
Yeah.
And what is the best backdoor for BTC to go in? It's through the regulated financial markets, right? Like, if you create the best money that humanity has ever had, like it's obvious that people who are gonna like have to store value are gonna use it, right? And where are the biggest piles of money, right? Like
equities, debt, property.
They're the financial markets, right? So as we start to permeate, our little mycelium legs into everything, being a huge part of the financial, the TradFi markets, right? It's part of the story. It was just a matter of time, really.
Yeah, and I think it's interesting that it took. I mean, some of us could say, look, it's kind of surprising that it took so long for more people to actually try and copy Michael Saylor.
16 years is nothing. Like in money terms, like like it's crazy. Like tech companies took longer, to exist in financial markets, right? Like the pure sort of like SaaS company sort of thing, right? Like you think about it, like, we're going to be very soon at a point where, we're going to have more, if maybe we already are, we're going to have more pubcos holding BTC that hold gold, like actual gold, not some gold stock, right? We might already be there. I don't know what those numbers are, as I have never researched that, but it wouldn't surprise me that we would not already be there.
Yeah, that's an interesting point. I don't actually know. I'd have to look it up. But it is also kind of fascinating just that, the way it is. Like, as I look at the dashboard now, look at the top, obviously MSTR, the 800-pound gorilla in the room or whatever. They've got 640,000 coins. The next is Mara with 52,000 or 52,850. You've got 21 at 43,000, Metaplanet about 30,000, BSTR about 30,000. And, it's just like a huge drop off, right? Because, what's your take on this? Do you think it's going to be just kind of a winner takes all or winner takes most kind of scenario here? Or do you see it as like there's a market for smaller guys to come and rise up?
It's like capital likes like aggregation, right? Like it tends towards monopolies and aggregation. It's just how capital works, right? Because liquidity begets liquidity. So I think what we're gonna have is we're gonna have a healthy sort of like top 20 companies, right? And these guys are gonna have the lion's share of it. And then you're gonna have the rest, and the rest is gonna be like the middle is gonna get a bit squeezed, because people are gonna either want security by having the big ones, or like and stability, right? Or they're gonna want the very little ones to penny stock and try to find
Right,
the
because they want
next.
the high risk, high reward sort of thing. Yeah.
Exactly, and I think that's how people are gonna probably split their portfolios. It's gonna be the top and the bottom. So I guess like the opportunity right now for the middle ones is to one find financial markets that are different than the big ones have. So go find other countries like Orange in Brazil, or like go find financial markets that are untapped, and try to build a something that is more compatible with that specific market.
Yeah.
Have an advantage there.
So do you agree then with the idea that it's kind of like there'll be a few winners per jurisdiction then? Is that kind of how you're seeing it?
Absolutely,
Yeah.
yes. But I think people are going to get clever, right? I think you're going to have companies that are going to be very good at one thing, even though they may not have the biggest market cap. They might be very good at some specific financialization that makes sense for the investor.
Right. Whether it's alpha generation strategies or some
Exactly,
technique.
right?
Yeah.
Like maybe, I don't know, maybe Strive comes up with some weird, like thing that just works for the people looking for that specific thing, right? And maybe they're not as big as MicroStrategy, but maybe they solve that problem, right?
This episode is brought to you by CoinKite, the makers of my favorite Bitcoin hardware wallet, the Coldcard Q. Now, some people think self-custody is too hard, but it's really about taking responsibility for your Bitcoin wealth and understanding that self-custody gives you a true feeling of liberty. The Coldcard Q has a full keyboard and big screen. It's got 2 secure elements and a true air gap, allowing you to go fully air-gapped using QR codes from seed generation to transaction signing. You can power the device using 3 AAA batteries, so you don't even have to plug it into the wall for power. You can easily use it with Sparrow Wallet for PC or Nunchuck on mobile, and you can dial it into the right level of security and complexity that you choose. If you want a simple setup, just use 12 words and single signature. If you want passphrases, easy. If you want to add multi-sig or co-signing features, you've got those too. So go to CoinKite.com, use code Livera to get 10% off on your Coldcard or other devices and level up your self-custody today. Gotcha, yeah. And I mean, as we spoke about, mergers and acquisitions, they just bought Semler, right? So that's an example. Like, we've already seen M&A in this space. Like, that's kind of early. To me, that feels like, wow, I wasn't expecting that to happen until, a bit later, maybe another year or two down the track.
It makes complete sense. Why not buy another stack of BTC with stock?
Yeah. Yeah, I mean, it's accretive, right? So
yeah, exactly. I think their deal was probably mostly stock. I don't know. I haven't looked, but
I think it was equity, but yeah.
Exactly, right? So like either direct equity or some form of stock compensation, so you don't have to go borrow money. You print more shares and you acquire another pile of BTC. That's pretty sound strategy, right? Especially this early, that you can get away with it.
Yeah, and I guess it seems like the game now, as I understand it, and of course the game is changing, so maybe the answer is different in a few months' time, but it seems like the game now is to sort of get to the preferred shares phase. So MSTR is obviously already there. Metaplanet has spoken about that. but maybe the others are like seeing it as, look, that's the end game. We need, and in order to be able to do preferred shares, we need to get to a certain size and scale. And so maybe the game is to get to that size.
I think the thing is like because MicroStrategy is like pushing a bunch of new things and see what sticks. I think everybody else is going to try to copy a bit, but like I think very soon we're going to start seeing things where it's like, you know what, like, no, we're going to only do common, that's going to be our
Right.
thing, and then somebody else going to do something else. And because, like you can't, I mean, God knows, maybe like, at a certain size, you can do more things. But like generally speaking, you can only do so many things, right? And you want to be the best at that one thing. And again, like to give returns to shareholders, you don't have to be the biggest one, right? So I don't know. It's hard to know. Like this is all so new. I mean, like you have never been able to do any of this shit before because you never had a asset, an underlying asset that has no counterparty risk.
Yeah.
Right?
I mean,
Like,
that's the game, right? The game is to accumulate this thing. And I think there have been a lot of questions and challenges thrown, especially now that treasury companies are in a bit of a lull. There are some people saying, there's maybe a few good, like the view of other people in the space is they would say, well, maybe there's a room for a few, and then there's just a lot of trash out there in terms of the pure plays, and that you should have a business that's earning Bitcoin, not using financial techniques. Where are you on that question? Like, do you see it like there is room for how much room is there for, let's say, financial engineering Bitcoin treasury companies
it's
or pure
endless.
plays? Yeah.
I mean, it's like endless, completely endless. Like people will come. I think we still have not seen the things that are possible, like at all.
Yeah.
We haven't even thought of them yet. We need to like we need a lot of time in the market with the things that we can kind of like immediately see and play with it, right? Like I don't think we have even gotten close to what's possible. Again, it's
Interesting.
like you
Yeah.
have an asset that has no counterparty risk. Once the market understands the value of that, like things really change, right? Because right now, everything that they do with the underlying asset has to sort of follow securities law based on assets that have counterparty risk, right? So like it's a tricky thing. It's just we haven't crossed that chasm yet, right? Like you need another 5-10 years in the market, right, for regulators to really wrap their heads around what's going on, for us to have more diversity in qualified custodians, for us to like start coming up with interesting technical solutions for these companies to move funds between them as well. I think we're just so early.
Yeah, interesting. So you see it like there is actually a lot of potential for these things, but it's obviously it's going to be a wild ride. None of us can predict the pathway. But I guess in your view, are you fundamentally bullish on these things? And I guess maybe the question some Bitcoiners would want to ask is, there's one camp of Bitcoiners who see it like, it's anti this cypherpunk ethos. Why are you talking about treasury companies when you should be, only using self-custody and peer-to-peer? Do you see it as, well, let me put it this way. There's some people who are kind of against treasury companies. There's some people in the middle who are sort of like just...
Bitcoin demand is Bitcoin demand, right? Like
Yeah.
use it however you want. The whole point of Bitcoin is it's your own damn business, right? So like demand is demand. Like I don't care where the demand comes for Bitcoin. And the more demand we have, the bigger the asset gets, the more protected we are as individual holders, right? So, just think of like this pub calls as moat, right? Like, your government no longer can fuck with your asset, because if they fuck with your asset, now they trash the market and now the teachers' pensions don't work, right? So like they literally can't break BTC anymore of regulation.
Right, because it's become so ingrained over time
Exactly.
as it gets more
You want to
ingrained into
be.
the system.
That's right. Like it's like electricity, right? Like if you want more power lines, right, everywhere, right? Like you want a more connected grid, right? Because then you're safer, right? Like if one spot breaks, you still get power delivery, right?
Yeah.
And nobody's going to make electricity illegal now in your area anymore just because some people don't
Right,
like
because
it.
it's simply too useful. Too many people's lives depend on this thing. Like, it would just be foolish to kind of, do that. Now, the concern could be, okay, fine, NVK, numbers going to go up, but they're going to corrupt this thing. That it's going to create this kind of KYC compliance nightmare. There's going to be kind of everything has to be KYC regulated, and there's no, maybe they make moves against self custody or peer to peer. What would you say to that? Do you think that's a real thing, or not really, or it's a risk but not that high?
I mean, I think the battle for freedom of transaction, freedom of expression will never end, right? Like it's like nobody has this conversation about free speech, right? Like, oh, it's like, oh no, we shouldn't have big newspapers versus small newspapers. Like nobody's arguing about that. It's like the battle really is like, can you have freedom of expression or freedom of transaction or not, right? So I think like the point is you want more monetized actors having this asset, so it's in their interest to make the asset fungible.
Yeah, I think that's mostly true, but I could imagine an Odell or someone who might say, "Hey, look, some of these treasury companies, they might have obviously NGU aligned incentive, but they may not care as much about the freedom side of things. Like they may want the number to go up, but they may not care about your freedom to transact."
Yeah, that's a fair point, but the thing is, like them creating demand and making the number go up, it makes everybody who wants freedom more rich, and the people. Reality is
Yep.
like you can't fight regulation, you can't fight the state being poor. What are you gonna do? Go scream on the streets? Like you can't, like
Yeah.
protests don't work. Like what are you gonna go protest? Like it doesn't. It's idiotic. Like the
Yeah.
way you change things is by buying the government, right? Like and in order to buy the government, you have to have
We got to
money.
get
Like
NGU. We got to get the Bitcoin
exactly.
people wealthier.
That's we need escape velocity, right? We need economic escape velocity from state actors, right? Because when the individuals like have a lot of economic power, they have influence over governments, right? And they will make sure that their asset is protected in the way that they prefer. So
Yeah,
like
and I
I
mean,
don't I
arguably with the Trump phenomenon, at least partially, the crypto industry. Now, yeah, Bitcoin and maybe some shitcoin people, they put in some money, they supported Trump, and they kind of, arguably, you could say they tried to orange pill the Trump family, and now the Trump family is kind of on board. Now, maybe there's some
Yeah, you
downside to
need
that
you need
too.
them to have the same
Yeah,
bags. See,
yeah,
this is the thing. You want everybody to have the same bags as you, right? Because they don't mess with the bags. Like if the politicians are earning in BTC, they want freedom to transact their, you know, corrupt bribes or
their coins.
whatever, right?
Yeah,
It's like exactly like it's in everybody's interest to transact the stuff, right? You want that. I think like there's a lot of Bitcoiners that like remind me a little bit of like Canadian firearms regulation. It's like Canadian firearms owners for decades, they sort of like always had this approach of like if you just don't look the bully in the eye, right? Like they don't mess with your stuff. But it just keeps on getting eroded, right? Because they just sort of like, what, we're just gonna stay quiet. Hopefully there's no shooting and nobody comes after the guns, right? But now we're like in a point in Canada where it's like, they're just taking everything. So the reality is like you have to capitalize yourself, you have to build lobby, you have to build a lot of mass. You have to be an unfuckable, you know,
right.
system.
Yeah.
And then they can't do anything about it because you own them, right? Like that's how it works. Like people have this sort of like romantic view of democracy from like 100 years ago, right? And that's not the reality. It's just that, like every single system gets gamed, and whoever has access to more capital and more power gets to set the rules, right? And I think that we have to get there. We have to try to tame government from the pocket, not from the gun, right?
Interesting. Yeah. And so, in a way, I've heard different ways of explaining this idea, but one idea is that a lot of early Bitcoiners, because they've become wealthy, they've become more powerful. And so it's kind of like the elites in society, a greater percentage of them are Bitcoiners. And then maybe some of the current existing fiat elites, they've also kind of come in because now they want to hold Bitcoin too. So I guess what happens to society as more of the quote unquote elites have some Bitcoin, and what kind of shift in society will that create?
Yep. I mean, like, societies, like, since literally ever have been run by a form or another of aristocracy, right? Like, and that's always the people who have access to the most amount of wealth. It's
Yeah,
never
like
going
it
to
or not, that
change.
seems to be,
No, I mean,
yeah.
that's it. Like, that's how it works, right? Like, you can give the plebes the vote. That's how, people like to describe it, but like it doesn't really do anything, right? Like, vote harder, right? Like, and nobody wants chaos. Nobody wants war. I mean, sure, there's a few people who win from that here and there, but nobody wants war in their own backyard, right? Like that's universal. Like,
Yeah.
you know, even like, the people who spend, make all their money from military industrial complex, they don't want war in their
Right.
house,
They
like
don't
in
want to
their
send their
neighborhood.
sons and daughters away to war, right?
Exactly. Like it's like war, but not here, right? So you know it's no different really than how it plays out with Bitcoin. It's like I want freedom for my thing here, and we're just sort of like extrapolating that to an asset that's international, and it cannot be de-internationalized, right? Like gold was.
Yeah. Let's talk a little bit about, I think there's been some shifting attitudes on debt also, right? Because part of this whole Bitcoin treasury play, it seems to me, now I guess there's different interpretations here, but I think one interpretation is it's the leverage embedded into these treasury companies that allows them to outperform Bitcoin, right? Because now, to be clear, this is not like going 50x long, it's more like 20% leverage. So let's say 1.2x, maybe 1.3x, or some of these companies are more like 1.1x. And that debt is, because they're getting cheap finance, right?
Well,
Let's
it's
say,
fiat
yeah,
priced, right? Like it's
right?
priced in dollars, right? So like,
Yeah.
the Bitcoin hurdle rate is like whatever, 20-30% a year. And fiat is, like like the opposite of that.
Yeah, if people can
So
borrow at 10% or less, and I
yep.
guess some of that can be applied at the individual level. It's just that you and I as individuals, we can't get the same terms that a big public company can.
I mean,
And so
people
maybe,
did, like 10 years ago, a lot of people took mortgages on their houses and bought the BTC, right? Like
well, that's on the
it,
fiat side. Yeah, yeah. So, I mean, and the mortgages are fiat subsidized, right? Like fiat
exactly,
mortgages,
right? No, but like it's
government
no
subsidized.
different in the
Yeah.
financial markets, right? It's just that like you don't need to mortgage your house. If you're a financial company, you can essentially mortgage your shares, right? Like you can. I'm overly like being very simplistic here, but like that's the
Mm.
idea is that like you have assets, like you can either borrow against your BTC, which is the collateral there, but you can borrow against, a form of shares, right? Like you can borrow against different things that financial systems understand better, and that's why they can get better pricing on that debt.
Yeah, so I think what we're seeing over time is the interest rates for this Bitcoin collateralized side of things come down a little bit over time as more of the market understands what this is. I think that's something we've noticed. And of course, like you said, people want to get in and find the ways to get the cheap fiat and put it into Bitcoin. And that's this whole treasury company play. Like that's at least part of the story. It's not the whole story, but it's a big part of the story, isn't it?
Yes, and I think things are gonna like switch up a little bit. Once like you have TradFi banks, like you got your, like really like corner bank, right? Like I'm not talking about, JP Morgan that's hard for like an average person to open an account at. I'm talking about like really the corner, Bank of America, the corner TD Bank, right? Like having a product where, like they let you borrow against your BTC, for example, the same way that they let you borrow against your shares. Um I think the market for Bitcoin collateralized loans is going to greatly improve, right? Because there's going to be a lot more competition, and that's going to be true also versus the Bitcoin treasury companies, right? So retail is going to go and say, hey, I can go buy MicroStrategy, or I can just buy Bitcoin and borrow myself. It's going to change the dynamic a bit, and that's also going to bring down the interest rate for, say, like lending, right? Like where, right now, if they want to borrow money to reland, like it's a certain cost. But if the banks are used to people borrowing against BTC, they might lend to Lending at a cheaper price, or they might
Right.
just buy Lending. Right? Like it's like
Yeah, yeah. I think there's going to be a lot of interest in this lending stuff, and it has come up. And I understand if for some people in the Bitcoin world that's controversial, or they see that as like they have more of a moral or religious or philosophical objection to debt just in general. But ultimately, there'll be a lot of people
nobody
who see
cares.
this. Yeah.
It's like it's none of your business what people do with their money. Like nobody cares.
Yeah, I'm not personally opposed to using debt, but yeah, certainly it'll be interesting to see that kind of Because there'll be people who are kind of commenting on that, but then they'll say, well, look, hey, you can't stop me, right? Because there'll be someone else who's saying, like on the other side of that, there'll be someone who's saying, yeah, I am going to use debt and try to stop
I
me.
think there's a lot of Twitter tigers too, right? It's like,
yeah,
it's just a lot of people saying all kinds of shit on Twitter, but then at the end of the day, they're like, totally normie life, economically speaking, on in private. I don't think you should take your financial advice from Twitter in general. Just don't take any advice from Twitter.
unless it's buy Bitcoin. That's the only.
Exactly.
That's really the safest thing.
It is, and that's the cool thing too, is that like, we can talk about all this financialization, all this angles and all this shit, but at the end of the day, you can just like, go full caveman, like, and buy a bunch of BTC, put in your Coldcard and like go live your life and not give a fuck. At the end of the day, it's that's the promise, right? It's like people use it however they want. And honestly, that is the best way to use it.
Yeah. I think the other interesting thing, I'm curious if you have any take on, I guess, mindset shifts, right? Because Bitcoin has gone up quite a lot, right? As we speak, it's whatever, $118,000 per BTC. And yet there's like a bunch of OGs who maybe aren't as public on Twitter or online, and they're just kind of, some of them are maybe a bit disillusioned, or maybe they're just kind of checked out a little bit, even though they're still hodling most of the coins. What are you seeing there in terms of mindset shifts there? Is it, are people like annoyed with what's going on, or even like all this knots and core stuff? What are you seeing and hearing?
No change. I don't know a single OG that's not just like bullish, living their own best lives.
Yeah.
Like, I think most of the noise is coming from recent sort of entrance into Bitcoin. So it's like their first sort of like, it's their first cycle.
It's their first or second go around.
Cycle.
Yeah, not the third or fourth.
Like, yeah, but like I don't know anybody who's like an OD who's not just like complete, just like, yeah, this is great. Things are working according to plan. Let's just live our lives, and and things are going to keep on progressing. Yeah, I think a lot of the sort of like this bearish sentiment is just coming from people feeling the price not going up.
Yeah, and I think that's something where I think people maybe have a mismatched expectation, right? Because there are people who, and okay, maybe some of these people, they came in like very early years, so they're used to, let's say, the volatility of the 2013 cycle or the 2017 cycle. But here we are, it's 2025, it's just not as volatile. And it's, okay, yeah, it's growing, but it's not growing as fast as it was back in those days. And maybe for them, they're a bit, maybe they're just not excited by that. Maybe that's not enough for them.
I think, Livera, like the main thing is, I think a lot of people talk a big game about, the freedom and all the shit on Bitcoin, but at the end of the day, they're all just looking for a way to get rich quick. And Bitcoin is not that. I mean, like, there's probably a reason why you weren't there earlier, is because it was very messy, and it was like, like people saw their net worth go down 10x, like go down 10x. Bitcoin went down from like 133 to like what was it, $10, $12.
Yeah, there were some early big drops. Like I wasn't around before my time, but I think there was a drop from 32 to like $2. There was a drop from like 260 to like 50, from like 1,200 down to like 150, 20,000 down to like 3,000, 69,000 down to 15,000. And
everybody was poor back then, right? Like, it's not like it was like a bunch of people who were just using their like side play money. It's like, people putting their mortgages into that, right? Like, so it's like, it's just, like that's the ride, like if you want to be early in an asset, it's going to take a lot of pain. Like, instead of focusing on the price and the stuff, like go generate value and go create things, and like go work on what you're good at, and buy more Bitcoin. Like, that's it. Just like go do your thing. It's I think, again, it's like this bearish sentiment really is just because of the price action. Like, price goes up, everybody gets euphoric, everybody's happy again. It really is just a product of a product of the price. Everybody cares about the price.
And I think people maybe are just a bit upset that it hasn't gone up as much as they would have hoped, right? And like you said, that's like you were saying. I think that's what it is for some of these people. I want to get your take on the whole knots and core theme, because obviously there's a whole drama about this now. It's kind of like you can't avoid it. I know you have maybe kind of you have issues on you kind of have issues both with the core people and with the knots people. So maybe you're like in the third camp. Where are you at on this?
I mean, first of all, like Bitcoin doesn't have camps. I don't understand why people are playing Team A versus Team B. It's just too reductionist. It's even more idiotic than than yeah. It's just dumb. Um, yeah, I mean, like there's a multitude of things. I guess I'll just be brief on this. Like, not that my opinion matters, anyways. Like it's unnecessary changes to core. The reasons for it are sort of like very mediocre. It's mediocrity everywhere. I think the current sort of like the folks in core practically don't use Bitcoin. If they do, is like some small lightning stuff. It's very obvious. The client is not progressing in a way that really helps base layer achieve things that it needs to. We don't even have an indexer on core. Core doesn't support BIP39. Core doesn't even have authentication on RPC. While people are trying to make Rupert Goldberg machine sort of things with Lightning and all their shit. Like, so I think like core is sort of like misguided right now. But again, it's completely voluntary. It's fully, people work on whatever they want to work at. Like, I mean, like, who am I to say what it should be, what the priority should be? But from my perspective, it's like, it's just a lot of shit that it's completely low priority and nobody cares. Um, and I think the market shows. I mean, like, it's very obvious that where the majority of the dev funding goes to, what people are doing. Most people can run old clients, so it doesn't really matter. Um, and then, I mean, like, I always liked the idea of having knots like around. It was like a nice to have a little fork of Bitcoin that sort of like is like sort of follows. But again, the guys went like full retard. Like it's like there's a lot of good people there. There's good people on both sides. Everybody's good. Like like I don't ascribe malice to like most sides. Just people are very passionate. And then people get into this team A versus team B, and then they get extra retarded against each other on Twitter, and then it just keeps on like it's snowballing into like this shit show that it is now. Um, I think once you bring up CSAM, you kind of lose the argument. It's just like, okay, when you say what about the children, that's it. Like, it's like, really, guys, you really have to go there. It doesn't look good from an outside perspective.
Yeah. And some of the fear mongering has been, from my perspective, just crazy, right? They've been saying stuff like Core 30 is the end of Bitcoin, Bitcoin is going to die. And it's just, I mean, it's just crazy moral grandstanding and just like FUD that I mean, it's weird to me.
You really marginalize your own self, like when you go that far. But again, like, again, filters, it's not that filters don't work 100%. They work a bit, you know, but like there's a lot of nuance in that, right? So, you know, and if you're not willing to say that filters practically, technically don't work, what I mean? Like, it's just like both sides just keep on being like completely extremes, and we really didn't get anywhere. And at the end of the day, none of this shit matters unless you have a fork. So I think people should put their money where their mouth where the money is. Create a fork, and if people follow the fork, then great. If not,
Yeah. I mean, what would the fork even be at this point, right? Like, how would they?
you could make op return be a consensus rule. The size of the op return. I mean, you can do whatever you want. Actually, Portland made an interesting proposal on the mailing list, very very early, like not like sort of worked through, but I saw that Polstra commented on it, like
Right. I think it was
so
something like restricting witness size or something like this.
yeah. There was some conversation on that. So like, you have to be thought through, and you don't want to break things, but it should be like, even if you're on the other side, I think it's in your interest to sort of like help the people who want to make a proposal to restrict these things, be a solid proposal and see where the market wants to go. I think it's important. I really don't think we should support so much non-monetary data on Bitcoin. I think it's idiotic too. It's not good because, first of all, like, when Casey, created his first ordinal stuff, like, he had a lot of respect for the size of the data going in and figuring out like what to do. Um, I mean, sure, he stuck the dick butts in there and whatever, but like he
Right.
could
And I
have done
mean,
worse.
it was him
Uh,
that, it was he that, arguably, this is like the analogy of the whole smart cow thing, that he found a way to hack
mhm.
data into the witness, onto the input side of the transaction. And then
Yeah.
on the other side, people feel like, oh, that broke the data carrier size thing. And is it a bug? They fixed it with documentation. Other people saying no, and there's like a big fight about
But
that.
but it
Right.
doesn't matter. That's the point, right? Is it possible? Yes, people do it. I do like I ask hackers out there, like Casey, they're like, if you figure out how to do shit, you don't necessarily need to do it. Do you know what I mean? Because like bad guys don't have a lot of imagination, and they're not gonna figure it out. Like nobody figured that out for this long, right? So like just don't do it. Like it's like when Todd created like Node. Like you don't have to do it.
Yeah.
Like just don't. Like you don't have to like take a dump in the middle of the street just because you can, and you want to prove to everybody that you can take a dump in the middle of the street. Like, I don't know. Like, I feel like seriously, like
Yeah.
everything right now is so unnecessary. Mostly because people have nothing else to do. I think I don't know. Like, go build something. Like go. I don't know. Pick up surfing. Like you don't have to like do all this stupidity just because you can. But anyways, that's my irrelevant opinion.
Gotcha. So, any thought on implementations? Like, should there be multiple implementations, or is it a security risk to have that? Or, I know there's that Libitcoin kernel project where they're trying to help separate out some of the consensus aspects of it. Where are you at there? Like, do you see it as there should be multiple implementations? I mean, of course, I know there already are, but do you think, that's a good
I think
thing?
the main problem right now is this. Like right now, the main sort of release implementation is managed on GitHub, right? GitHub has horrific moderation tools. I think the people who are maintaining and managing users, businesses, and stuff like are very bad at that, like really bad at that. Is maddening bad at that. Um, and I think everybody needs to sort of take a step back and maybe reanalyze how they handle the non-community, let's call it the industry. Um, you know, I yeah, it's just the mediocrity on how things have been handled, and I think like people get mad at the other side, so they like instead of just having very stoic response, they would just go and kind of provoke back. There's a lot of that. And I get it. I mean, like, listen, I am the last person that could do that job. Like, like I'd never be able to have that level of stoicism to sort of handle, like the way that Vladimir used to handle things, right? Um, I think we need to sort of like have a deep breath and try to move back to how things used to be handled. I think was better. And you know what? Like, I think maybe we're moving to a point now where maybe like treating Bitcoin core consensus more like kernel and having different, not different forks per se, but different distributions might be helpful. We already kind of do. There's BTCD for Lightning. There is there's a few other things I forget now.
Yeah, like Libitcoin and Rust Bitcoin stuff and a few things. Yeah.
hmm So maybe that is a viable path, so that technically is the same thing, but practically at least there's a distribution of preferences. I think that might be more helpful. I mean, personally, I like my software to be a cathedral, but maybe Bitcoin. It's time for Bitcoin to move into a bazaar. Um, like for example, I really dislike Linux, right? Like I like FreeBSD because it's monolithic and there's just like a few guys, they handle it, and they're very authoritative on how they do things, but that doesn't work for Bitcoin. Um, but the cool thing is if you have more distributions of Bitcoin, you can have distributions with more sort of authoritative ways of handling things, right? And then you let the market sort of sort out what makes the best sense. Um, And I like the idea of moving, like standardness things into consensus. But again, it's like you don't want a massive a thing that's working either. So I don't know. It's just there's no good answers. Things are going to have to be experimented, and it's so early.
Yeah, unfortunately, not any easy answers there. I think. I guess closing things out. I guess anything else on the CoinKite side you want to mention before we close things down.
No, I mean, like, again, it's like on our CoinKite side, it's like sort of like heads down, sort of just trying to build the best self custody tools. Very caveman mindset. It's like how can we make things that don't break? How can we give you more usability, make it easier, make it more secure, add more features. It's kind of like like the seed vault stuff. It's like how can we allow you to do everything you need, or the key teleport stuff. How can I help you transact things being multinational person? uh, we're trying to build the device for the sovereign individual, right? So, we do love the fact that people approach us with ideas and sort of like their personal sort of like issues, trying to live in multiple countries, trying to do things that way. And if we can come up with technical solutions for it, like, power to the people that want to sort of like live in the next sort of paradigm of financial freedom. Um, so that's it on that side. Yeah, I mean, people know where to find me, and you can come scream at me after about my comments
About your
on core
opinions
and
about
things.
lots of things.
Exactly, right?
But yeah, I
Exactly.
guess that's where it's at. I guess coinkite.com, people can check it out. And of course, bitcointreasuries.net for those people interested in the Bitcoin treasuries side of things. I think it's a cool dashboard. I check it out every now and then. We'll leave it there. And thanks for joining me. I'll see you soon.
Thanks for having me, Livera. It was as nice as usual.